Welcome. We are back another day in the market. What's going on? First, pretty decent bounce in the market in quite some time today, even though we closed flat. So we did only close 0.04% higher on the SPY today, about 0.25% higher on the Qs. But the bounce we got off the lows looks like the highest bounce we've seen probably in like 10 days. So pretty decent bounce off the lows today. We're going to talk about that. Bitcoin and Ethereum not doing much. The US 10-year continuing higher. The VIX broke above the 200-day moving average for the first time since March. Gold getting a pretty steep sell-off. It rejected the breakout of this wedge. It rejected the 200-day moving average. We've got the dollar currency index absolutely rallying, highest prices since November of last year. And then finally we've got the Hang Seng index currently open and down 1%. So it's a very crazy market. We have certain things like 20-year treasuries hitting multi-year lows. Go over to the weekly time frame over here. Very close to having the lowest prices on this 20+ year treasury bond ETF. If we just drop like $1 more on this, it'll be lowest prices since the Great Recession. Okay, and then we can also take a look at something like it's a good one. Let me see if I have it on my other watch list. If we take a look at 1 to 3 year treasury bond ETF, this is also at the lowest prices since the Great Recession. There's one more that it just broke down. Let me see if I can find it. It's HYG. When we look at corporate bonds, let's go over to a daily time frame. And it's been in this triangle since pretty much exactly a year ago, and this just broke down as well. So we're getting a very big shift over here for a lot of bonds, with the 10-year just in its own world right now, just going completely crazy. And it's setting up a very, very interesting time in the market. There's a lot of different headlines going around. There's the government shutdowns, which typically don't happen. There's let's go over here. So what's a better way to put this? Let me see if I can find this exact one. Try to pull up an article. Market Watch. All right. CEO of Chase. I'm just going to read the headline. I'm not sure the world is prepared for 7%. Talking about interest rates, okay? He is more hawkish than his own economists. Is that the right way to pronounce it? I don't know why I can't pronounce that right now. Economists. If they are going to have lower volumes and higher rates, there will be stress in the system. We urge our clients to be prepared for that kind of stress. The CEO of Chase, debatably the safest bank, one of the safest banks in the world, is saying that right now. Okay? There's a lot of different opinions on what's happening right now in the market. Let's break it down. All right, let's get started with the SPY. Today, we did close with a bullish pin bar, okay? You got a bullish pin bar, candlestick pattern, pretty decent volume. And we're not really at any important levels right now. Let me see if I can pull this up. So right now, this purple line I just threw up on my chart is the 200 EMA. That is the current level in which we have now spent 2 days pretty much closing right at. okay? We're here at this 200 EMA, it's an exponential moving average. The SMA is slightly lower, it's sitting at 419. Personally, I think the SMA makes a little bit more sense to go down to because it also perfectly lines up with these highs from February and May of this year, which is also support last March. But for right now, the level we are holding is the 200 EMA. Okay, the only difference between the two of these is that the EMA is giving more weighting to the recent price action. The 200 SMA is simply just a moving average of the last 200 days. The EMA is still a moving average of the last 200 days, but it places more weighting on recent price action, which is why you can see it's higher, because what have we been doing since April? Going up, right? This started to go up pretty much just as the market was going up. While the market started going up over here in the summer, the SMA was still flat. So it's a little bit lagging. It takes longer for this one to turn towards the price action, which in my opinion gives it a better long-term significance, but short-term the EMA has more significance, which is why short-term we're seeing some buyers stepping in at this level. I personally would rather see 419 get tested and then actually bounce off of that. That is one thing I did want to talk about. I was talking about that with a good friend on the floor today, and there's a lot of people I'm seeing on Twitter talking about that. So it's another reason as to why technicals work. You know, one, it's literally a moving average, which is a technical, and it has a probability in and of itself. But then two, there is the fact that you have confluence there, which means other people around the world are looking at the same line and potentially placing orders based on the same line, which creates an imbalance towards the buy side if there's more buyers and sellers at a support, right? They're looking at the same support, they might be placing bids there as well, and then you have more bids than asks, and you start to see a bounce like you did today. So this is where we're currently at. On top of that, you also went ahead and filled this gap for the first time. You got a gap up on June 2nd. You filled that today. If we're going to be very precise, that was pretty much your exact level in which you really reversed off today. It was highs from May 30th, highs from June 1st, and that gap is now filled. So it's a very interesting time here. If this MACD doesn't continue to grow, there's a potential for classic bullish divergence on the MACD. This is also the lowest RSI since October of last year. What happened in October of last year? Well, let's go back. That was the bottom. So since we were at the bottom of pretty much this whole entire trend, the RSI was this low, and it's the first time you're that low again. Another thing I used to do quite often on the streams was take like a Bollinger Bands. And in a move like this, they become less significant, which is why I've not really talked about it, because you've been at the lower Bollinger Band for like 4 days. When you have a little bit more of a stable market, it can work better. This was a pretty decent sell-off, so I just kind of wrote it down. But if we go to something like over here where the market was going sideways, you were reversing off the lower Bollinger Band a little bit better. But once you have an extreme move up or an extreme move down, it becomes a little bit less relevant, because we could still go down more and keep riding the lower Bollinger Band down for another 3 days, and then you bounce off of it. There's really no difference, if that makes sense. So that is the daily on the SPY. If we go over to the 4 hour, if you would have just closed a little bit higher, you could have gotten a tweezer bottom / bullish engulfing candle, but you did not. And then if we go over to the 1 hour chart, you can see I did have a zone here on the 1 hour, pretty much the same level I was talking about on the daily. And that is the point in which you bounce off of with triple classic bullish divergence on the MACD. So if you want to start to chart out this for tomorrow, I would say it is valid. You did get a little bit, or you're testing a 1 hour falling wedge breakout. And you do have a gap to fill above on the 1 hour chart at around 430.8. Then you've got another gap to fill at 438. So 2 upside gaps to fill. All right. Let's go over to the QQQ now. Same thing, the potential for classic bullish divergence over here on the MACD, but you're testing a very important level, right? These were your lows from June and August. Now you're bouncing back into it. It could act as resistance because you broke under it. So if you break a support, then you go back up to it, it could flip into a resistance. So that's something to look out for. We go over to the 4 hour time frame. On the 4 hour for the Qs, again, we're very close to getting a tweezer bottom / bullish engulfing candle. It's a lot closer than the SPY on this one, as a matter of fact. Another thing I wanted to kind of take a look at was this. If you were to draw a trend line from both of those lows I just talked about, you kind of bounce right at it. So it's a downsloping trend line, you're somewhat bouncing off of it. This might be an alternate bullish bat. It is. This is an alternate bullish bat on the 4 hour. I drew out 1 hour chart. Bullish harmonics on Monday, and they did not play out at all. On Monday night stream, I looked at it. Let's draw it up right now, because I was not live last night. So on Monday's stream, I did this. I was watching this. You did have a potential bullish bat. You started getting a bounce at the 886. And then what happened on Tuesday, yesterday, was on lower time frames, you took out the low, right? You took out some important lows. Where was it? So this was Monday. Why is this not the same? Tuesday. Okay. So here you can see so this was Monday's low. So this was the PCZ of that bullish bat. If you go back over to the 1 hour, bullish bat. It's right here. This is the PCZ. Let me put that on the 15-minute chart. So Monday night, I was watching this. You had the bullish bat pattern completions on, you bounced off it. Then on Tuesday morning, okay, this was Tuesday morning, right over here. This was Tuesday morning. Tuesday morning, you ended up breaking down for Monday's low. You invalidated the bat. And right there and then, I got into puts on the SPX and I made over 100% profit. So this is why you can have variables going into the next day, but if you get a gap down or if a gap up, any sort of gap or any sort of quick move at the open, you can immediately get a flip side reaction. And that's what I saw yesterday. And even though I had a bullish bias going into yesterday's open, I still went and got into puts because the 5-minute time frame, the 15-minute time frame after the open did not align with my bias going into the day. So that's just a little piece of education. Let's say you're super bullish on tomorrow, and then the market opens and you get bearish price action. You don't have to force yourself to stay bullish. If it changes, it changes. You have to be fluid. You got to be like water, as Bruce Lee said. All right. So this is really what's going on in the overall markets. We've also got the Russell 2000, which also is classic bullish divergence. I'm interested to see whether this is a bullish Gartley. This is a bullish Gartley, wow. So on the daily time frame, you have a bullish Gartley on the Russell 2000 with increasing buy volume today, and then classic bullish divergence on the daily, nearest support, which is 173, and then also near the trend line of this triangle. So maybe a little bit of relief coming in for small caps. This was the leader today. The SPY and the Qs were barely green. The Russell was up 1%. Then we also have the ARK ETF. I'm not a big fan of this technically under this. This was previous lows from August, and then also your 200-day moving average where you gapped below it. So unless this level is reclaimed, pretty much unless you get back above 41, I'm still bearish on this one. So that's the overall market. Today I did do some live trading if anybody watched it. It was not a winning day today, unfortunately. Took a 20% stop on Tesla. Before I started live trading, I made 40% on SPX calls. If you go back and watch the recording, which is my last live stream, I was in the bathroom right before I got over here to do the live trading, and I got into SPX calls. Made 40% like the second I sat down and went from like being up 13% to 40%. It's literally like the first minute of that live trading video from today. And then I got to Tesla calls, and I took a 20% loss. I actually, let's go down to the 5-minute. On Tesla calls, and I got into the calls right around over here, right? So I got into my Tesla calls here. There was a wedge, there was some support, and then I believe I stopped out right here. I didn't like how it flipped this previous low into resistance, and then it also rejected the VWAP, and then at the same time the SPY and the Qs were developing a bear flag. My original stop was actually supposed to be down over here, But once I saw this candle print, I was like, I'm stopping out early. This looks like it's going to drop quite a bit. And so it did. So it dropped quite a bit after that. So that was not a great day, but a lot of good risk management lessons from that. Today, NVIDIA was up 1%. It's still kind of just hanging on to this trend line. I'm surprised it's still there. Because if you go over to like a 1 hour, you're just continuously starting to reject the area in which you were bouncing off of, which is this trend line. So this is a very key level to watch. I guess this could also be a 1 hour bear flag setting up as well. But hey, it could always break above it. It's been doing a decent job of holding up. And then Apple broke under that 173. I've been talking about this on the stream for a while. This was the support. Once you broke it, you flushed like 3% in 2 days. Not too surprised there. Now it's testing these lows from the end of May. After that, you got the 200 SMA at 166, which seems to be the next big level. But this could be, let's see, is it a 382 retrace? Pretty much. I would say it's close enough. This is a BAM, okay? I don't know if it's going to play out, but this is a BAM. All right, bat action magnet move. When you have a potential bullish bat forming, you break under the B point, it sets up the move all the way down to the D point, which could be a short trade. Not recommending anybody to do this, not financial advice, it's just a trading method. And of course, you always want more variables, but I would say breaking down from this bearish pennant and then also failing to hold above this previous resistance from last year is quite the breakdown. So there could be more selling for Apple here. We'll be interested to see what that does with the overall market. Fisker had a great day yesterday with some delivery news and an upgrade. I think it was from Bank of America. Does it say here? But yeah, Fisker went from 540 all the way up to 650 yesterday. It pretty much went from the bottom of the zone up to the top of the zone. Now it's sitting right in the middle of it. So it's just going sideways overall. It was exciting to see the price action yesterday, but as long as it's within this zone, there's really not much to talk about. It's still in a channel going sideways. One thing to mention though is you might have a little bit of a triangle setting up over here on the 1 hour chart. So this is going to break out or break down tomorrow. That is 100% certain. So we will see which way it breaks. AMC down 4% today. It's just going sideways overall, nothing much there. It could be a little bit of a bearish pennant forming here. And apart from that, nothing too crazy. AI was up a few percent today. Still has a PCC of this bullish bat down at 20.5. Energy names did well. The energy swings. VTNR was up 4% after backtesting the wedge. VLO up 2%, backtesting the inverse head and shoulders breakout. And then N phase up about 1%, just going sideways at the pattern completion zone of that harmonic. So that's pretty much it. Let's look at the sectors. Actually had a pretty good day today. Got hidden bullish divergence developing here. You're still in this pretty large ascending triangle. You actually did do a decent job. This is what I talked about on a Monday stream of flipping this high from August into a support. Industrials, XLI, classic bullish divergence, but it's under the 200-day moving average, so we'd probably have to break above that for a better look. And then the XLF got a bullish hammer candle today, but it's been a pretty rough streak of selling. So that's a quick update for tonight. Thank you for watching the stream. Hope it was insightful. I will be live trading tomorrow morning. If you want to join that, wap.com/championvibe. You can get 35% off your subscription using the coupon code CHAMPISBACK. Go to the pinned chat if you want to read what I just said again, so you can get it and be there in the live trading. If not, have a great night. See you in the market tomorrow.